For decades, Uzbekistan was one of the most closed economies in Central Asia, a country with millions of people, valuable resources, and a strategic location. But there is still limited connection to global markets. But over the last several years, something has changed. Uzbekistan has been opening its economy, reforming its currency system, privatizing state assets, and trying to attract foreign investment. So the question is Uzbekistan becoming Central Asia's next major economic opportunity, or are investors overlooking the risks? When people think about Central Asia, they usually focus on Kazakhstan because of its oil wealth, or Kyrgyzstan because you watched one of my previous videos. Ha 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 ha. But right next door is Uzbekistan, a country with one of the largest populations in Central Asia at approximately 38 million people, significant natural resources, a growing consumer market, and a government actively pushing economic reforms. And unlike some frontier markets where investors are waiting for change, Uzbekistan is interesting because the change is already happening. Uzbekistan became independent in 1991 after the collapse of the Soviet Union. For many years after independence, the country maintained a heavily state-controlled economy. The government played a major role in industry, banking, currency controls, trade, and major investment decisions. That created some stability, but it also limited outside investment, private sector growth, and integration with global markets. For investors, that matters, because a country can have resources and population, but if capital cannot move freely, if foreign investors cannot access the market, and if the currency is artificially controlled, then the opportunity remains locked inside the system. A major shift began after President Shavkat Mirziyoyev came to power in 2016. Uzbekistan started implementing economic reforms. And this is where the story becomes interesting. One of the biggest reforms was currency liberalization. Before 2017, Uzbekistan had a system of multiple exchange rates. There was the official rate, and then there was the market rate. That created a major distortion. If you were a foreign investor or foreign company, you could earn money in Uzbekistan. But converting that money back into dollars could be difficult, inefficient, or unrealistic. In 2017, Uzbekistan unified its exchange rates and allowed businesses much broader access to foreign currency transactions. The SMM immediately adjusted sharply. At first glance, that looked like a devaluation, but in reality, it made the currency system more transparent and closer to market value. Sometimes reform means letting a currency fall, not because the economy is collapsing, but because the old exchange rate was artificial. And for frontier markets, that kind of change can be painful in the short term, but important in the long term. Uzbekistan also reduced barriers for foreign investors. That included improving currency convertibility, making it easier for foreign companies to repatriate profits, simplifying parts of the tax system, and reducing some bureaucratic barriers. The country also expanded visa-free travel and electronic visa access for many countries. Now, visa reform may sound like tourism policy, but it also sends a broader message that Uzbekistan wanted more engagement with the outside world. For frontier markets, sometimes the biggest opportunity is not discovering something new. It is removing the barriers that prevented existing potential from being unlocked. Another major part of the reform story is privatization. Uzbekistan inherited a system where the state controlled many major companies. Banks, industrial companies, energy firms, transportation companies, and other strategic assets were heavily influenced or owned by the government. The reform goal has been to reduce the government's role in parts of the economy and bring in private capital. A good example is the banking sector. Historically, most banking assets in Uzbekistan were state-controlled, but the government began moving toward privatization of state-owned banks. One major example was Ipoteka Bank. Hungary's OTP Bank acquired a controlling stake in Ipoteka Bank, making it one of the first major foreign strategic investors in Uzbekistan's banking sector. That matters because banking reform is not just about one bank. It is about whether the financial system becomes more competitive, more efficient, and more connected to international capital. Other banks and state-linked companies have also been discussed as part of broader privatization plans. And this leads into one of the biggest future events for Uzbekistan's capital markets. The big question is whether Uzbekistan can turn major state-owned assets into investable public companies. That is where the Uzbekistan National Investment Fund becomes important. The government has moved toward listing part of the state-backed fund on international and domestic markets. If successful, this could be a major milestone, because for the first time, international investors would have a clear way to gain exposure to a portfolio of Uzbek state assets through public markets. This is important because the Tashkent Stock Exchange is still small and relatively illiquid. But if more state companies list over time, banks, energy companies, transport companies, mining companies, telecoms, then the entire investment landscape could change. This is the difference between a frontier market that remains closed and one that slowly becomes investable. Uzbekistan's economy is more diverse than many people realize. It is not just a single resource economy. Major sectors include gold, natural gas, copper, uranium, coal, agriculture, textiles, manufacturing, and services. Uzbekistan is one of the world's important gold producers. It also produces large amounts of natural gas, copper, coal, and uranium. Recent data show annual production around 120 tons of gold, 44.6 billion cubic meters of natural gas, 150,000 tons of copper, 3,800 tons of uranium, 8.2 million tons of coal, along with oil and gas condensate production. And Uzbekistan has plans to increase production in several strategic minerals over time. That makes the country important not only as a domestic growth story, but also as a resource story. Gold matters for reserves and exports. Copper matters for electrification and infrastructure. Uranium matters for nuclear energy. Natural gas matters for energy security. So Uzbekistan's resource base gives it real economic weight. But the key question is whether those resources can translate into broad-based economic development. Uzbekistan also has one of the largest populations in Central Asia. This is one of its biggest advantages. Many developed countries are dealing with aging populations and shrinking workforces. Uzbekistan has a younger population, a growing labor force, and a developing consumer market. But as I have said in previous videos, population alone does not create prosperity. The real question is whether the economy can create enough productive jobs, private businesses, and investment opportunities. A large population is useful only if the system can turn human capital into economic output. Uzbekistan does have a stock market, the Tashkent Stock Exchange, but this is still a very small and developing market. The number of listed companies is limited. Liquidity is low. Foreign participation is still developing. One recent monthly report showed average daily stock market trading volume of around 9 billion Uzbek sums, or less than $1 million per day. That is tiny by global standards. For comparison, some individual U.S. stocks trade more in a few seconds than the Uzbek stock market trades in a day. So yes, Uzbekistan has a stock market, but it is still very early stage. And that is why future state company listings matter so much. The market does not just need more investors. It needs more investable companies, more free float, more transparency, and deeper liquidity. For international investors, access is still limited. There are not many Uzbek-based companies with widely available ADR or GDR listings trading on major international exchanges. That is one reason the planned international listing of the Uzbekistan National Investment Fund is so important. It may become one of the first meaningful ways for global investors to access Uzbek state-linked equity exposure through international markets. But as of now, Uzbekistan is not like Kazakhstan, where investors can find more recognizable international listings. For most retail investors, Uzbekistan is still difficult to access directly. There are some specialized funds focused on Uzbekistan. One example is the AFC Uzbekistan Fund, which was launched to invest in the country's liberalizing economy. There have also been specialized private or niche funds focused on Uzbek growth opportunities. But these are not the same as buying a simple ETF through a normal U.S. brokerage account. For most retail investors, Uzbekistan exposure is still not easy, liquid, or widely available. That may change over time if more state assets list publicly and if international investors gain access through London or other major markets. But for now, Uzbekistan remains a difficult market to access. So how could a retail investor actually get exposure? There are basically a few routes. First, through a specialized frontier market fund with Uzbekistan exposure. This is probably the easiest route if the fund is available to the investor. Second, through future international listings, such as the Uzbekistan National Investment Fund, if it becomes accessible through a major exchange. Third, through direct local market access. That would likely require finding a broker with access to the Tashkent Stock Exchange, opening an account, completing foreign investor documentation, wiring funds, converting currency, and buying local securities directly. That is operationally complex. It may involve custody issues, liquidity issues, currency conversion, tax questions, and regulatory requirements. So for most retail investors, Uzbekistan is not a plug-and-play market. It is more of a watch list market or a specialist market than something most people can access easily today. And as always with frontier markets, currency matters. The Uzbekistani som has weakened significantly against the US dollar over the past 15 years. Around 2010 and 2011, one US dollar was worth roughly 1,600 Uzbek som. Today, $1 is closer to the 12,000 som range. That means the som has lost a substantial amount of value against the dollar over that period. Some of that reflects the 2017 liberalization when the official exchange rate adjusted sharply. But the broader lesson is important. If you are a foreign investor, your return is not just about whether Uzbek stocks rise, it is also about what happens to the som. A company can grow, a stock can rise, but if the currency weakens enough, your dollar returns can be reduced or even erased. That is exactly why currency risk matters in frontier markets. So what is the bull case for Uzbekistan? The bull case is that Uzbekistan is one of the most interesting reform stories in Central Asia. It has a large population, a strategic location, significant natural resources, a government pushing economic reform, potential privatizations, and a stock market that could deepen over time. Investors are not just looking at what Uzbekistan is today, they are looking at what Uzbekistan could become. If the country continues opening up, improves institutions, lists major state companies, and attracts long-term capital, the investment landscape could become much more interesting, but the risks are real. Uzbekistan still has heavy government influence in the economy. Its institutions are still developing. The stock market is small and illiquid. Currency depreciation remains a risk. Foreign access is limited, and reform execution is not guaranteed. Announcing reform is one thing. Successfully implementing reform over decades is something else entirely. That is the difference between a country with potential and a country that becomes truly investable. Uzbekistan represents one of the most interesting frontier market stories in the world right now. A country moving from a closed, state-controlled model toward a more open and market-oriented system. The opportunity is real, but so are the constraints. The question is not whether Uzbekistan has potential. It clearly does. The real question is whether Uzbekistan can turn reform, resources, and demographics into long-term sustainable growth, and whether outside investors can actually participate in that growth. If you're interested in deeper analysis on frontier and emerging markets most investors overlook, consider subscribing. This is Frontier Market Intelligence.